Well, thanks for tuning into this conversation. You may well call this the talking point of the day today, simply because a conversation with Mr. Sunil D'Souza of Tata Consumer gives us great insights, or I'm sure will give us great insights into not just what's happening for the company, both on the international side and the domestic side, but also what could happen to the space at large over the course of the next 2 or 3 quarters, considering that their rural uh, experience is far better than what some of the others, whether in the FMCG space or in the building material space, has been. Mr. D'Souza, great having you. Thanks for taking the time out.
Thank you. My pleasure.
How would you sum up the quarter? Did it live up to your expectations? I mean, most of the analysis that I've seen talk about how India has done very well and international is disappointed.
So let me say, overall, it was a decent quarter. If you look at our numbers, it is 12% top line revenue, 19% EBITDA, and 22% group net. I think those numbers are good by themselves. If you look at the overall business, we've seen volume growth across all categories in India, gross margins broadly stable. In financial terms, EBITDA grew by 80 bips, working capital came down by 3 days, and ROC went up by about 200 bips. So financial terms were quite well. In our strategic overall imperatives, if you look at it, outlets, we had said 4 million by September, we're 3.9. We spent the same amount of A&P, almost the same amount of A&P this year as last year, same quarter. Costs as a percentage of sales are coming down. Innovations, we've hit an all-time high of 5%. Premiumization is on track. Our distribution initiatives, including the new ones that we've announced, our split routes in 1 million plus towns and going down to a 50,000 pop strata, that's all on track. So overall, all in all, a good quarter. But to your question about India and international, India, of course, I mean, we've seen volume growth across categories. Our growth businesses are growing at a 58%, all, whether it is ready to drink, Sampan, or the soulful business. International, overall, I think margins back on track. EBIT margins coming back on track. International, primarily, if you step back, we had two issues which were impacting us. Number one was currency fluctuations. Number two was overall inflation. So we had to take some very steep price increases, and I'm a believer in putting margins back on track before going after volumes.
Okay.
Right. So we have put margins back on track very firmly, bar the US, where we are seeing still some volatility in coffee prices, but we remain confident it will now stabilize. But whether it's the UK, Canada, etc., margins back on track. The other thing we had announced was we were looking at our costs very strongly. And we said we'll do a bit of cost restructuring. And if you look at the UK, for example, EBIT is now in double-digit territory, EBIT margins, which is in the 3 years that I've been, I've not seen that. So that's come back. And along with that, we had done a lot of work on consumer, customer, product, etc. We've done our Tetley relaunch in the UK, completely sustainable packaging, whether it is the outer or the tea bag, improved our blends, and we're starting to see market share trend up. Canada market share holding up, industry slightly soft, market shares holding up, UK market shares going up, US, like I said, coffee prices are the bugbear, but overall, I would say back on track. It's just a couple of quarters before you'll start seeing international coming to the party big time.
So am I reading this correctly? You seem to be believing or saying that you have been on the track to restore margins on that side, and they are now reaching a level where you believe that in a quarter or max 2 quarters, they will be at a level which will allow you to pursue volumes.
So overall, apart from the US, we are already at a good margin perspective. So now the thrust is to get volume growth back into the business.
Okay, and that comes in the next couple of quarters at the very least, at the latest.
Absolutely.
So to say.
Yeah.
Okay.
Absolutely.
Okay, great. A word on the growth businesses, since you invoked that, then I would also want to wade into rural versus urban. But your growth businesses, not only are they, I mean, yes, a base helps, but not only are they growing at a good clip, but their contribution, I believe, to your overall pie is also increasing meaningfully, about 20%, if I'm not wrong now. So how does that pie move over the course of this year? And as the base keeps on growing higher, how do you pursue your volume versus margin piece for the growth categories?
So absolutely, the growth businesses have done very well. I think this is the second quarter where they've delivered 50% plus top line. And that's across all the three growth businesses that we define, whether it's Nourishco ready to drink, the Sampan business, or Soulful. So not only have they grown, but they've also improved their margin profile broadly. And the fact that we've delivered as a company, we've delivered EBITDA margins while investing in these growth businesses is the thing that I would like to point about. We're juggling 10 balls, but keeping all of them in the air, if I may say so, right? So that's turned out very well. I do think we've got a large runway still in the growth businesses. So whether it is, if I go specifically, Narishko, as I said, the whole thesis was geographic and portfolio expansion. We're about 75-80% of the country in terms of having put the manufacturing and distribution footprint, but a long, long way to go to build businesses still. Both Gluco Plus and Copper Plus, which are the lead brands out here, 60% plus, and I think we've still got a long way to go. And we've started pumping in innovation, whether it is Gluco Plus Jelly or Juice and Jelly in PET, or we've just launched our affordable mineral water, if I may call it, and now we're going to expand it quickly. Sampan, of course, I mean, it's a pantry brand. The pantry space in India is huge, huge. Just about making strides. Our dry fruits launch has gone well. Our hing launches in the north have gone well. We've just gone into Dalia, which is again a big category up north and at very decent margins. So Sampan, I would think, will continue. We've guided for a 30% growth on Sampan consistently going forward. We remain committed to that. Right now, we're beating it, but we will stay with the 30%. Soulful, strong brand, strong team. All it needed is distribution expansion and a bit of fuel on innovation and marketing. We're giving the fuel right now. We're expanding categories for Soulful. We've got into granola. We've got into Nutri drinks. We've got into Oat Plus. As we speak, we've just about finished the manufacture of Choco Sticks, which is again going to be another blockbuster. We've always maintained, now you'll start seeing launches every 4 months from Soulful, expanding their addressable market. So we remain very bullish on our growth businesses.
Yeah, which I'm sure you are, sir. I'm just trying to understand, do they probably will continue at the same pace or even better? Just trying to understand at some point of time, do you bring back the focus or not bring back the focus, that'll be wrong term, enhance the focus on margin versus volumes, or because they are such high growth businesses that you would forego some bit of margin if the need be for the sake of growth? The reason I ask this is simple. We've seen wheat getting weaponized in the summer. There is talk of how fuel or energy may get weaponized come winter as well, because the conflict between Russia and Ukraine not quite going away. What if commodity prices, much contrary to belief of going down, start moving up in the second half of the current calendar?
So in a large company with a multiple portfolio, you've always got to play your cards right? And there are some drivers for margin, there are some drivers for volume. I do think we've got the mix right in the last couple of quarters. Our tea and salt businesses, margins are back, its volumes are starting to come back, and that allows us fuel to put into the rest of the category. And in the growth businesses, it is not only volume, I would say it is volume and margin. Because while we are growing volume, we are also improving the margins out there. Are we powering it with more A&P? Yes. But that's, how do I say, choices that you make across the portfolio. On inflation itself, I think we saw a perfect storm last year, whether it was currency, commodity, overall inflation impacting demand. And we passed through that, I think, pretty decently. I would not jump ahead of myself, but if there is inflation which happens, I do think the team is well geared to tackle it.
Therefore, volumes will not see a lag because of some unforeseen factors as things stand currently.
See, in our big businesses of tea and salt, right, I think inflation is broadly stable and we are playing commodities flat. Ready to drink, we've seen basically it was oil prices. Oil prices went to up to $120 a barrel, now down to 80, 85. So sort of tapering off. Sampan, it's a commodity business. If commodities go up, we take the price up because we are benchmarked to the outside world. Soulful is a value-added business, and Soulful operates on very strong gross margins, value-added portfolio. So am I discounting inflation? No. Am I worried about inflation? No. But if it happens, I do think we're in a good position to tackle it.
Okay. I read it as that volumes don't come quite, don't quite get impacted majorly unless something really unforeseen happens. Now, the other aspect, Mr. D'Souza, that I'm picking up from different sects of the industry, India Inc., which is exposed to rural versus the urban divide, is that rural seems to be picking up for a few players, well, building materials, in some FMCG commentary as well. I reckon we were talking about it, and you said that for you, that experience turned better from late last year itself. But what's your view on how the second half shapes up, especially in light of the fact that we are 12 months or less than 12 months to the election? There could be rural spends in multiple ways. There are 5 state elections this year as well. So how do you reckon rural shapes up for the second half?
See, I'm not a forecaster. I
Of
only
course.
react to events in a calculated manner, if I may say so. But you're absolutely right. In our business, and I won't comment for the larger community overall.
Okay.
In our business, I think we saw demand bottoming out sometime late last year, October, November, so to speak. Because we did see a stress on volumes. And I would take my beverages business, packaged beverages, which is tea, as the barometer. We saw volume stress, which is very, very unusual in this category.
Okay.
But starting March quarter, June quarter, now volumes have come back. Have they come back to the level which were there pre-COVID or a historical average or our aspiration, which is mid to high single digit? No, not yet. But they are in positive territory and they're holding. I do think last year the big impact was inflation, which had impacted all the inputs from a rural farmer's perspective, whether it is fertilizer, fuel, etc. And I don't think the MSP increases were good enough to compensate for them, so they were getting squeezed. Now that inflation has been stable, MSPs have come out a bit, and people have got used to overall this new norm. I do think demand is coming back. We see that whether it is specifically rural distributors per se, or geographies which are highly rural skewed, or even in our portfolio, in the lower end of the portfolio, we've started to see volume growth come back. So right now, I remain optimistic because, yeah, the monsoon this year was late, but from all indicators, I would believe, barring parts of the country, overall, it's more or less catching up. If that happens, inflation is benign, I would think you'll start seeing rural growth come back.
Got it. Mr. D'Souza, one final question, and because we're talking for the first time, I'm inclined to ask this. Maybe you address this elsewhere, but in some ways, with you being there, there is a comment that I read, for example, today, that you are in this multi-year transformation journey from being a tea and salt company to the broader FMCG franchise, and now that the initial building blocks are put into place, growth can be non-linear as well. I'm just trying to understand. It is an FMCG business. Non-linear growth is kind of unheard of, except for one or two individual categories. Do you reckon that over the course of the next 3 years, and I know you're not a forecaster, but do you believe that there is a case for maybe non-linear growth coming in because of the variety of things that you are doing within this broad umbrella?
Yeah, absolutely. So I'm not sure where this comment was made.
It was in a research note from Jefferies.
Okay, so I'm not sure I made the comment as specific as this, but
no, you did.
Yeah,
it is their thesis. Sorry, I'm just trying to correct. Okay. I'm not saying you said it. Yeah.
So here's the thing. The whole reason why Tata Consumer was formed was to fulfill the FMCG aspirations of the Tata Group and put the company right up there when it comes to the pecking order of FMCG companies. We've started as a primarily commodity company, if you may. It's tea and salt. And now we're slowly making it a larger food and beverage company. The whole idea is to get into the FMCG space, but one step at a time. We're building a stronger F&B. So have our engines, the base engines which are required for a good FMCG company in place. I would say broadly we're getting there. Whether it is distribution, now we're about 4 million outlets, so we're in the top quartile of FMCG companies. Innovation, we had put up a number saying it has to be 5%, it's up there. A&P, last quarter, India was 7.1%. We've improved 50 bips versus same quarter last year. So we're firing up our marketing and branding spends per se. And we built capability, whether it is in digital, whether it is in operations, etc. So I think broadly we built our muscles. We are still not, I would say top of the class, getting there. And now the focus has to be both on organic and inorganic growth, right? So we've already identified in the food and beverage space, dissected all the segments, categories, etc. We've clearly identified where we want to play. The good news is the Tata brand name just enhances the capabilities for us to accelerate. For example, when we launched dry fruits just online, just to test it out, right? Dry fruits as a category is a trust deficit category. As soon as we put it out there, now we are clocking about 60-70 crores annualized online within a year of launch. So whichever category we get into, providing we select the categories right, do it right, organically, we will make a difference. That's number one. Number two, we're also looking at inorganic spaces, spaces where it will take too much time, energy, effort, and therefore a cost of getting in organically and doing it slow. So in those sort of categories, we will do inorganic moves as well.
So non-linear growth possibilities in specific categories. Otherwise, you will strive to kind of be around those growth rates that are anticipated. Fair assessment or not quite?
Yeah. So we've always guided. I mean, organically, we will grow double digits top line and margins strong to better than where they are, and therefore bottom line growing faster than top line.
Got it, sir. And inorganic may add to that. Great. Thank you so much, Mr. D'Souza. Lovely talking to you, and all the best for the next few quarters.
Thank you. Thank you very much.
And viewers, thanks for tuning in.